Okay. Wednesday, December 21, 2016. All right. I have 9 screens of Natty Gas. Okay. The blue line underneath is the open interest. Okay. Um, January, February, March, April, May, June, July, August, and September. Okay. I didn't throw in the others, but they basically look like the same as the deferred contracts. Last week, there was more buying than natural gas, okay? You can see the upswing in open interest is basically in the deferred contracts as the front month, okay, January, came off, okay? You can see the open interest drop off here, okay? Let's see, here's February. Okay, so for some of you now, that's the downside of futures is you have to roll your contracts. Okay. Today's it was a sharp rally. Okay. Sometimes that's indicative to short covering. Okay. I haven't looked at today's estimated volume and open interest yet. But how I'm reading this though is that since there was more buying with the front end pullback, they were actually buying the deferred contracts and the prices were holding. Okay. The deal is if you go back and look at 2014 on natural gas, basically the same type of pattern is breaking out. Okay. I will treat these as flags for now. I think it took about 7 days before we got the quote unquote reversal. Deferreds poked through the previous high and then reversed off of it. Okay. Same type of deal. I'm looking at a longer, monthly type chart where the trend line is still pointing higher. Okay. So how I'm going to look at this is that back in 2014, we actually traded sideways on Natty Gas. Okay, after it also had a huge run up and then it traded sideways, I believe, for 2 or 3 days. But the peak actually came in late February. Okay, so with the amount the buying that's been going on last week, okay, there's a lot of people that really believe on the back end of this deal. Okay, some years natural gas peaks out in July. So where am I here? Here's July, and you can see the open interest increasing in here. Okay, so as you know, I was looking for some sort of drought, hard winter in 1819. So this may be coming in early. If Natty Gas doesn't pause and continues to run, it's, as they say, it's off to the races. Just by, as my last video talked about caution with the angle of ascent, same type of deal here. With the angle of ascent, it tells you how bullish they are. Okay, so basically the back end is they're holding up the back end while the front end, the open interest came out of it as it pulled back. All right, so I think there's like 7 or 8 days left until the contract rolls over again into February. And you can see that basically they moved out of January and they moved into Feb. All right, March kind of held on. April dipped a little bit. May dipped a little bit. June dipped. Okay. They assume that, I'm going to guess that I'm assuming that they think that they're going to start to replenish and everything. By all the news should be over by then, but then they come down to July, and they moved into it, right? So they're looking for some sort of pullback. They think that there won't be a shortage in June, basically, is how they look at it. But they're looking at possibly heavy electric use in the summertime. That's how I read it. So what I'm going to do now is go through the charts. Some of you have asked about how these charts are done. Where am I at? Charts, right? Okay. So I guess I can just start off with the S&P here, and then I'll just start from a raw chart. Okay, so this is basically a lot of mess on here, but basically the S&P was running along this median line here. This is a 2-hour chart, and then this afternoon we kind of dipped. The blue line here is your ATR trailing stop. Okay, and I have some projection bands on here. It's basically similar to like Bollinger Bands, that kind of thing. And was there one more on here? Where's SAR? Are you on here? Parabolic SAR. Okay, those are the red dots. So the blue is your average trading range. This would be your stop. So we basically banged on this. So in theory, this is the stop for the longs, and we're basically resting on it right now. This was your dots. This is your SAR, just a lazy way of drawing a trend line, and then it cracked and it came through it. I'm going to give the bulls, because of where we are, it won't take much to move this, okay, because things begin to thin out. We really haven't dropped anywhere, but like I mentioned in the video, the whole thing is the caution. The angle of ascent is increased. It was just sharp, even on a logged chart. So that tells me that folks are a little too giddy, and we saw that with call buying. Okay, any type of correction in here is going to correct all of from 2009 up. That's how I look at it. Basically had a couple of pullbacks in 15 and 16 that were deep, and then we traded sideways for most of the year. Now we traded sideways, but coming off of from 1800. Okay, so my only concern is that when I go through all the world indexes, they're having a tough time here. Okay, we're also doing something totally different. We're actually raising interest rates. We did raise rates before, from 4 to 6, 2004 to 2006. But that's not, we're looking at a larger degree tightening here, okay? Because eventually we're going to have to squeeze out all the money that's in there, in the system. The Fed has their balance sheet. We pumped, I mean, if you look at it, it's even Japan, okay? Japan, the country itself, is buying their assets. We're, throw out the textbook with the ZERP and stuff. We're trying our darndest to keep this thing afloat, basically. Okay, so like I mentioned in the caution video, and no, we, 3/4 of the indexes broke out, with the NASDAQ just breasting, on what would be resistance is now at support. But there's no room for failure is how I look at it. Let's see here. Let me go back. Okay. I suppose I can go over these real quick. Okay, what I have here is you can find these. These are under monkey bars. I call them little orbs. And basically it has the market profile. Okay, it just, when you look at a bar, you have your open and close or your candlestick. This kind of tells me what's going on inside the bar. Okay, then you have kind of like an underlying trend. Then it broke it. Now we're trading sideways. This is the Australian dollar. Okay, so it's the Australian dollar. It's basically pausing, not getting much traction. Now this is a short-term look compared to a larger degree. All right. It basically tells me, the highlighted areas where the most volume happened. So here, prices traded, came down, same type of deal here, and then it's having a pause. Basically, I think it's a pause before it goes lower. We're kind of all waiting on the dollar to either break up or pull back. The U.S. dollar has the most amount of longs in it since the beginning of the year. Okay, so it's susceptible to a shakeout. Here's a British pound, same type of deal. You see your bar chart, but this tells you what's going on inside the bar chart. Okay, it comes on down. As you know, once I heard this thing was at a 31-year low, I'm like, okay, I'm interested. Even though it's not a commodity in the sense. Canadian dollar, it's trading under the shaded areas where 70% of the trading's happening, so we're trading below it. And then does that coincide with, do we have crude's only up 15 cents now to 52.64. So, you know, the Canadian dollar was moving up with crude, and now it's coming against it. There is seasonal type balancing of books and things of that nature too. Here's the euro. The euro, just like the British pound, has a lot of shorts in it. Okay, so I'm not saying that this is going to take off, but because of the commitment of traders reports, they're leaning on the short side on the euro, kind of like getting the Dow 20,000, NASDAQ, whatever, you know, parity in the euro. Okay, things are gonna get quiet here, so hopefully they'll stay quiet. Japanese yen, same thing. As it moves lower, the U.S. dollar yen moves higher. We know the last couple of weeks there's been more sellers shorting of the yen. Okay, so basically, I don't know about you, but not many people that I know of can hold on 1, 2, 3, 4, 5, 6 days of nothing happening. So that's usually when something happens. The other thing too, like I talked about with the stock market, the yen is used as a carry trade. Okay, so if stocks unwind, the yen will probably unwind too. Here's the Brent crude. Now I call this kind of a shoulder, head and another shoulder. We're trading down in this area. We're not, you know, we're only a couple of bucks off the high, so you can't really say, oh yeah, this is it. But if it does break the neckline, we'll just call it 53. And the high is 57, 57 and a half. That's what, $4.5 bucks. So from 53 to 49, 48 and a half. You can see down here, there was in an area where it traded. So that's where it would fall to. Our crude oil, same type of deal, not as clean. We'll say a shoulder head and another shoulder. Now we're trading lower end here. Here's 50. You know, like I said, with the OPEC deal, we opened at the high, we gapped. I showed you the gush chart that looked like a bear flag. You know, if everybody wants to lock in, they could, you know, and then just start pumping away. Stronger dollar, lower commodities. Cotton had been trading sideways. It was a tough read chop. The pros were short. It dropped a small indecisive type pattern, you know, if it was a candlestick, and then it jumped back up. In theory, this would be your short again, because it's retesting what was support is now resistance, and we're trading inside of today. Okay. All right, and how would I orbit these guys? Let's see here. Monkey bars. Okay, so here we go on the S&P now. I just tossed on a Fibonacci for fun and games. How I look at it with the Fibonacci and everything, I just assume everything is self-fulfilling. I mean, when you have program trading and you throw in all these variables, you know, pivot points and Fibonacci levels and all this kind of stuff, the whole thing is basically a trend line. These are days. This is basically 2 hours of I tried to get as many of these in here as possible. So here you can see from the post-election, this is December. So we had the December rally in here, and we're up in here. Basically today it was a soft test of this high, this 2267 and a half. I just drew that through here. I would say that would be your alarm for this to continue higher. Okay, but right now we're trading. You know, we tagged below the low of, you know, we're trading below it. NQ marker below 49.40 on the Nasdaq here. So, like I said, a lot of the caution video. There's a lot of air under this. I wonder if this works at all. What do we have? All right, so the happy place for this year is basically 2155, we'll say. Not a lot of trading is going on. All this fat area means that there's a lot of trading that's in this area, okay? So this could be a distribution pattern. If we go below, you know, 2220, okay, you're going to leave all of this behind, which is a lot of that giddiness. And then if we do, then we trade into this area, and then there's another area, 2080. Now we've dropped 100. Okay, so the deal is it's just, it's the caution right now because of just the angle of ascent and just the giddiness and the call buying and everything. If you're an option writer, you want to get away from where we're at. So, how's this 4-hour workout? Okay, so here's the election low. Okay, so you can see, here's a low of, this is, I think I said 45, but we'll call it 40 here. So here's an area. Tomorrow we have GDP. It could be good, and we roll over because now they know that they're going to increase interest rates again. Okay, so so that's that. Here's the next level of pause. Like I said, I honestly don't think these things are going to hold, and we would retest down here. They should. To do like a springboard, they kind of go up and come back, swipe underneath here, get some sellers in here and then swing it higher. But like I said, I really don't think this stuff is going to hold, and that we'd end up retesting down here. And by then, of course, we definitely left all the calls behind. But it's one of those things that's, we've only pulled back. We're down, 4 now? But we're, short term, we are trading. We're trading below the last couple of days. Okay, so like narrow range, that kind of thing. So just be very careful. Here's gold, basically same type of deal, just rolling over with the dollar. I believe silver kind of put in a hammer on what's today? Wednesday, Tuesday hammer, but it's it's not my cup of tea. I wait for, I want it when nobody wants it, and I don't want it when everybody wants it, So when they're busy doing something else, and silver's at whatever, $8.53, I'm into it then. We'll skip that one. This I'll tell you about. It's $. So as this goes down, interest rates are higher. You can see when they talk about dots, this is, new contract type of deal, the rollover and things of that nature. They've already priced it in going forward. Lean hogs, we're getting, we'll call it a bull flag, but it's kind of losing its momentum here. Copper basically kind of looks like a bear flag, and then rolling over, that type of deal. You have your trend lines, underneath, but you can see how it kind of drops, trade sideways, drops, trade sideways, drops, trade sideways. Now we're working on another drop. Heating oil, same type of deal with oil. We may be running back the other way. Natty gas. Okay, so now natty gas is trading basically above kind of the mushy area. So where are we at here? So we traded down, and then we just took off the other way here, but we're now trading above, where the mushy area was. So there's obviously some pent up excitement going on here. Where am I here? Okay, so that was the poke through and the reversal here. Buggers. All right, here's the NASDAQ. Okay, my little NASDAQ beeped. I had all we're doing is we're basically marking time, but the NASDAQ was the strongest and it was the weakest. But you can see, if you drop, it'll fall somewhere into the 4860, 4840 area. Here was an area, the mushy area where all the volume happened. But like I said before, if they cut this thing, it's kind of like the first couple of videos I did, talk about, looking forward, that Q puts go out to January 2019, and they're willing to sell it to you. What was it, $13 or something, for, what was it, a 120 put. So and it was just, to be in the money, it was just there over the summer. And now you have a couple of years. I'm not saying but that's how I look at it, is here you have it where they're really giddy. The market's been moving. We're in a transition period. Anytime you talk options, it's mostly spec, but you look at it as a hedge for your overall portfolio. You can kind of, because some of you, you may have been buying for the last 30 or 40 years, and you're waiting for some sort of slaughter to come back in, and then you'd end up buying your banks and your home builders and things of that nature. But as you can see here, now we're it's kind of like here we are at 94.20 or 49.20, and all of a sudden you're dropping again, and dropping again and dropping again. So just like I said, just be very careful. Just that angle of ascent. Gasoline, okay, different type pattern. The gas has been outperforming that heating oil, which is an oddball season. But we have businessmen coming in. We have CEOs coming in to run the country. Guess what that means for the rank and file? Too bad. It's that's here nor there, but let's see here. Where am I at? Okay, here's sugar. Sugar's not getting too much of a bounce off of it went into the 17s. Not how much of a bounce off of there. Okay. I looked at beans with South America because it's that time of the year. How come we didn't get sugar, and how come we didn't get coffee? Now beans are beginning to roll over on Monday, Tuesday, I think it was. Down decent, but not getting a bounce off of here. Probably marking time, but one of those where, now all of a sudden you have to be talking 17, 16, 15. If you're going to stay on the bull trend on the long side, playing off of weekly. I'm playing off of weeklies. It just, if you put your stop in, a week or two back, you're a distance away than, like here where you're daily, and all you have to do is just get it poked, just you're a little too close, that kind of thing. This is silver. Okay, so silver had basically, if you look at on a bar, it was a hammer, and we traded in the hammer area. Usually with bear market rallies, they're short, sharp, and quick, and you're not seeing it. Okay, I'm not saying it's not going to happen. But the thing is when you get Monday's type action, usually there's a huge carryover. We'll say like, the hammer made a natural gas. And then, let's go back a couple, right? Because that was kind of a hammer, right? You make your hammer, all of a sudden she takes off running. That kind of thing. Yeah, very cautious on equities. Here we go. Here's the Russell now, okay? Well, Russell had the momentum. I posted a chart today in Twits about the yellow line, the money flow. It was a bit frothy. Let's see here. Why didn't I do it this way? Okay, watch this here. So I'll set the chart back to factory reset. Yikes. Okay. All right. Okay, so that's the rollover. All right, so here we have this. Let's see here. Okay. And then needed to do this one more time. Futures, right? Overlap. Volume. Okay, overlap volume, right? This gives me a separate one. Oh, that works. Okay. So I just threw this on, of course, if the prices are falling. All right, but you can see here, okay, so this is basically the whole year. Volume pickup, okay? Volume push, lots of volume. Lots and lots of volume here. Okay. Caution, I sent out a chart of 1987 and I call this thing a lip. I don't, I suppose I could go for my CMT, right? Chartered Market Technician. Yeehaw! A suffix. I suppose. I enjoy going to college and school. You know, you get to use that ADD brain. You know, putting it on paper is a different story. You get the right idea, and you get about 80% through, and something else happens. You know, that's why you hire people to hand them a piece of paper and say, "Put this on," and take away my mouse. You know. All right, so this is kind of like a lip, and I showed we're gonna need to set an alarm here. What am I looking for? Alert. All right, odd number. Would be 40. All right. Okay, so what it was 1987. It's just a pattern. Now, if you look at a coin flip generator, okay, and you put in like 1,000, you begin to see the same type of patterns that play out in on the charts. Okay, I mean, all of a sudden you'll see double tops, or there'll be trends that develop and things, and then in theory over time you should get the bell curve, right? Okay, so I kind of we had this reversal today, I'm like, oh, that reminds me of the lip of 87, and I'm like, well, how do I explain, a monthly or weekly of 1987 to a daily or intraday here? And I said, well, this little pattern here, Elliott wavers, if we said, okay, this is wave 1, this can't be wave 3, because it can't be the shortest wave. So this is one of those oddball things. That's what, it threw me for a loop. But the only thing that got me real excited was the angle of ascent. I'm like, okay, this thing's really sharp. And then all of a sudden you get the call by and you're like, okay, obviously we know who's giddy into this thing. And then it's like, well, just, it's one of those, just hurry up and get it to January 1 so we can, relive the anniversary of January and February 2016, but maybe something a little more serious here. I think the market, when Reagan got in, I think the market fell 20%. It was already running when Obama came in. Bush came in, and that was too. So, I mean, everyone has a different outlook, different parts of the cycle, strong dollar policy versus weak dollar, there's a lot of macroeconomic things on here, because we all are investing for the future, right? We all are indexing. And when we're about to buy or about to lose our house, lose our wife or husband and our job, that's when we go in with both fists and buy. That's right. That shaded area and all those FRED and all those Federal Reserve Bank data. Every time it's gray, the recession, that's when you buy. Okay, so we have this going on. I don't like this pattern at all. Now the lip part was we blew through the first. We didn't even bother. We just kind of slid right through it. Okay, slid right through there, and we also took out the second. Each individual index is different. Like the Russell here is going to be different than the NASDAQ. That's just kind of farting on the. That's a technical term. When you're taking your test, Kev, just put that down as an acronym for something. FART. Fail? No. Whatever. Okay. But it slid through this, and it's basically swiped down here, and I talked about that. And that's the whole thing. One day you wake up 4 days later, and all of a sudden you're back to where you were before the breakout, and then things are going to get real interesting. All right, so I have this here. So then I go back, and I go and type in linear regression lines. Now what that is basically hit the 50, hit the 100. Okay, what that does is encapsulate prices. Okay, so it just takes, like here, banged off the upper end, blah, 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 blah. I call them like, 1, 5, 2, 5, 3, 5, 4, 5, 5, 5, median line. All this is just a lazy way of Kevin to draw trend lines, right? The deal is that the computers are running the show, right? So they're going to have these things in here. They'll have their stochastics, their MACD, and blah, blah. They may tie them all together and come up with one component. They may have, advanced decline. All I know is that when January and February rolled around, some guy sitting in Havasu said, okay, buy with both hands. That kind of, for the life of me, I don't understand how these guys and gals, besides the fact they take out fees, can't figure this out. Well, that's why, I angle at the human side of things. All these patterns are all laid out, the whole deal, to me, as long as it's marching along the center line, that's your reversion to mean right there. Reversion to mean. So this would be the first stopping point per se. But I'm, like I said, I'm not, I have to give the bulls because they broke out, right? The angle of ascent, it's just like look at the angle of ascent that happened in natural gas. This, you're at 270, 274, and then all of a sudden you're at 376. And you pull back down and then you take off again. So, but this is the whole lip thing, and we zapped through here and came through here. That would definitely make sure that those calls don't get picked up. Then you have to go on the downside, when that happens, and I'll the whole video thing, a lot of you are for education and that. Some of you are like, hey, what do I do today? Hey, do your own work. Some people are like, this kid, nothing he said is stuck yet. Reminds me of that client that I had, he was wrong for 14 years. I told him don't change a thing. Call me up. That's like I said, it's like reading people. It's not what they say, it's how they say it. So I got an alarm under there, right? Yeah, one alert. But these are all so close, but that's right, 1987. I'm not saying we're going to crater. What I'm saying is, like that angle of ascent is a little on the extreme side. Okay, so back to this. So this is just a daily. I come back in here. Then I do money flow. All right, money flow, and I usually make it yellow. Why, I don't know. I think it just happened that way. And then I want it on the upside, right? So I need to move you up. Okay, because over the price helps out. Whoops. Try that again, Kev. All right, apply it. Okay. All right, so now we'll explain the money flow. All right. The left side chart, right side chart, prices here, blah, blah, blah here. This is a zero line on the money flow, okay? Now, I assume that as money goes in, price goes higher, right? Okay, so here you have where price is below the money. So I'm waiting for the money to come out. Oh, money is below here. Money is below here. So it's basically telling me that the money is finally coming out of it. So now I'm trying to find some sort of bottom here. This was a nice little hammer here, and then we took off running. Okay. All right. We trade sideways. Okay. Money came out of this, right? We took off. Money spiked above price. So that tells me that, people are a little giddy. This time around, really, really giddy. Okay, they're going for the next swing. Here was the money, and after a while, it didn't develop. Okay, and so it's one of those things. It's like a word of caution. The Dow, since I have this one here, the Dow. Okay, you can see the price below the money. Blah blah blah. Here's where things kind of changed. Post Brexit, money came out. Market traded sideways. We traded lower, and then it came screaming back in here. Okay, so that. Where they got in, right? They're all that money is stuck in here, well, obviously, but all the money is stuck into here. You can use previous peaks, all the data is crammed together, but you can see that, if they're in, what's left? Like here, they were selling into this post-Brexit. Here's our Brexit. Here, the old sell in May and go away, we'll say, right? And it reflected price. Price didn't go anywhere. All right, but now it took off running here. The S&P, okay, the mini. This is goofy. Okay, you have the price, flows above it. Then all of a sudden, post Brexit, the same thing. The money can't. Nobody. How I'm reading it, nobody wanted this, right? And it takes off running, and some of it comes back in. All right, not as previous before, even though prices are traded higher. Okay. You remove drawing. How about that? Okay. All right. So here, what I have to do is, because of the flow is below price, okay, I have to assume that any new high, then they'll come in running. Okay. That's what I'll assume. But usually everything flows together naturally. Money comes up, price goes down. Money goes in, price goes up. Money comes out, price goes down. Money comes up, blah, blah, blah. Money comes out. They sat on the sideline here, and then it took off, and they're not interested. I'm assuming that there's smarter people out there than I, kind of deal. You know what I'm saying? All right. But I would assume as if the GDP or whatever, through next week, whatever, this is we know this is basically a whole 8 days. What do we have? 1, 2, 3, 4, 5, 6, 7, 8 days, 8 days of sideways. Or this is marking time. So we'll either break out to the upside or to the downside. I guess I should move this one up. Now that I'm looking at bars. It's a little tight, but there's nothing like ba-ding while you're sleeping, right? Because we have Europe. USA has a lot of data tomorrow. The thing is I'm not against administration. I'm not against all lines. The word of caution was that we moved really quick. We had lots of call buying, angle of ascent, and we have people who aren't interested. Okay. So it's kind of like, the deal is what happens if we fail up here. There's a whole lot of sentiment here. That would be, in theory, right? They wouldn't start, well, in this case, they never got in it. It would be like on the Russell side. Did I look at the NASDAQ? Okay, so the NASDAQ was the leader. Where are we here? Okay, post-Brexit, we roll up, money flows in, basically goes sideways, right? They try again, not as much, couldn't go anywhere, and had to unload it. Threw the money back in here again. Barely a slant on here. This is October. Okay, so what do we have? We're September. Hold on a second. Where's my rollover? Okay, here's September contract. Okay, this is a month, right? Okay. All right, so, okay, yeah, rollover. All right, so money goes in, they get caught, comes out. All right, goes back in. Now it's trading above it again. We're right on this median line. We're basically trading sideways above the previous peaks here. So I have to treat this as a pause before heading higher. But since this was the leader and it's not really doing anything, the whole caution comes down to this median line here. It's the lines are pointing up, so your overall trend is up. But it's one of those things here that, if you begin to lose this and it comes back in, I mean, how many times can you, push this thing and you're pushing on a string, that kind of deal. You're not getting that out of the NASDAQ. All right. And let's see, we looked at the Russell, we looked at the S&P. All right, let's take a look. Nikkei has been running too. Okay, so here's the Nikkei. All right, so the money didn't come into this one either compared to previous times, right? So, the deal here is as the yen's been moving higher, so has their stock market. Here we have a big red bar that basically encapsulates the previous. This one basically just paused, higher, pulled back. So in my eyes, I think we're going to get some sort of RSI divergence here. But the money didn't come flying. You figure that it would get all frothy like the Russell did, because the Russell was quite frothy. And of course, you know, that's the Santa Claus rally. And here there's a lot of people stuck up into this area. So they would be susceptible to the rollover prices falling through. That's the Santa Claus rally. Okay, so let's see here. I need to, what else do I put on here? Oh yeah, pivots and stuff. All right, so here, do this real quick. Pivots, pivot points. That one I make a weekly, and persons I just keep a daily. So here, to not make it all gaudy, show today only yes. Let's see here, what was that one? It's pivot point, that weekly. Just put weekly on there. And then persons, I need to make this, yes, just the day only. Okay, apply. Okay, so then we'll drop this down to say like a 4-hour chart, or we'll just do 2 hours. Yeah, blarney and a half. Even shorter, Cav. Oh, that's right, it's for tomorrow. Okay, so let's see here. Well, okay, all right. Okay. The red are resistance, okay. And the what is that, fuchsia? Fuchsia traders. Fuchsia traders rock! Those are your pivots. Okay, and then green are your support levels, okay. Let me change one of them. Where's pivot points weekly? No, this one will work. I don't want to make it too so icky. Okay, icky. Oh, Kevin. All right, icky. What am I looking for? How about 30 days of 2 hours? Oh, that's right. And then you have to go in and change this to don't fit studies, make it wide. All right. That sort of didn't work. All right, that made things even worse. Okay. All right, so relationship to price and pivots. That didn't work there. We're going to have to go to daily. Okay, that's not going to work. Sorry, guys and gals. All right. Whoops. Oh, let's really make it look cheesy. No. Let's take a look here. How does this work? Too much. Okay, so bang, pivot. Okay. Not what I was looking for. Is that all the way over? Yeah, okay. All right, so price is above pivot, new day. Price is trading below pivot. Okay, so it loses the momentum. Price comes up, bangs off a pivot. You have a narrow day. Okay, so the range narrows. Well, this isn't really clean. Bounces off pivot, up day, resistance goes up. Where are we at? Friday goes up, comes back down. Oh, those aren't very clean. All right, here's it resting on pivot, and then at the end of 2 day, okay, right, it's holding it, trends higher, doesn't make it, tries, dips down, retest, falls. Here it is, now we fall again, okay. So we failed to make a higher high, and now we're pointing in the other direction, so there's underlying weakness, even if you draw a trend line underneath here. Okay, we're below pivot. So here on the Russell, you're gonna look for 1377 is what we're going to try to shoot for now. This is going to be your support level here, 1368. Okay, but the deal is that since it's failed to make a higher high, kind of like supporting it if it's falling. All right, let me go to ES. Let's take a look at this one. All right, so here is our median line. Prices were kind of riding on it. We broke through it. We broke through it again. You know, our next line, this is the 50s, so this comes in underneath down in this area. And then the lower one, I think I wrote about 35 to 37. Because this move, I have to kind of estimate going forward. Okay, so if there's a springboard, okay, so if we decide to drop 20 points, okay, this would be it, and it would actually begin to take out some of this here of the on the way up. So everybody who bought in would now be underwater. And remember, we've rolled over. Okay, so this is all, these people are all long in guessing. All the people are long in this contract. Okay, so on the upper side, on the upper end, Kev, on the upper end, say if we come back through the pivot, here's 61, 65, then we'd shoot up here to like 74, 77, and what's up into there, this area, 89, 90, 20, 90. Okay, so there's kind of a lot of space up in this area. 73 was the high. Okay, so you could actually go, one caution is, of course, we go and we spike up and then reverse. Okay, that's like the whole, like I said, the whole thing with the caution. You know, it's, you go up to a new high, who wants it? You know, because you have to have the buyers up there to hold it, right? You end up with more sellers than buyers. You know, kind of like this. The money came in, and it rolled down. It came in again, and they took it out of it. All right. And then here you cracked the pivot, and the money came out. All right. And so now here, the green are your support levels. It's in, like I said, but since it failed to make a new high, we're testing the downside. So we're, you know, in my eyes, we're trying to inflict some pain here. And that's, like I said, the whole word of caution here. There's M. Oh, how about M, Kev? Ooh, okay, so you have all the sideways trade on the Dow, comes down. It's fighting the support. You know, this is, you know, I bought the first dip, I bought the second dip, I made the third. 19.8. It's down on here on this line. These are 2-hour charts. You can see that it lost the median line. It came up and it swung, it hit it. And so now, you know, now we broke this one. So I'm going to assume we're going to test this. But like I said, that angle of ascent, you know, before you know it, you're down to 19.6. Did I write about that? Down 600. Yeah, I guess 2,600 would be 19.4, which would be down in here. Yeah, see, okay, this, you know, like I said, just caution. Caution here. That's too much. Look at that, Kev. Can you make people sick? All right, so that's where we're at. This is the Federal Reserve Day here, the reversal. What's that? 19,765. Okay, so that would be our little alarm that that's lost again. Do 59. Yeah, 59. I think it's a prime number, right, Kev? Whatever. All right. Okay, so we're resting on the top of that there. Yeah, just caution. I'd really like to see this just mark some time here. But like I said, there's a lot of air underneath. You know, we worked our way up, and then we just took off again. So all of a sudden you start taking out these lows. You know, you have the excess money up in here. Right? Which one didn't I do? NASDAQ. Oh, that's just, I'm glad I'm making this video longer than it should be. All right, so the money, they actually rolled out of this thing. All right, so what's this? 48.60. All right, so we're playing that game again. You know, tried to take out the new high and then dropped. Then we went up and poked through and came back, and we made a good run for it. And there's hardly any follow through. and declining volume here. Price is going sideways, but it's losing, you know, here's a line and it's losing it. So, you know, down here would be the next test down here. Right? So let's see here. That'll work. Set to default, you betcha. All right, so right. Usually what I have, okay, so it's just pivots. They're just targets. You know, like here, it banged on, you know, one of the R's. Okay. That's all it is, you know, what's everyone else seeing that I'm, you know, like this is a bear flag and then it falls on through. Bear flag falls on through. Heavy volume, so you're finally getting rid of the people are getting out of here, you know, and then you go back up and then you have a high volume day, you know, the bodies are in here and then you go sideways. Volume beginning to wane, prices beginning to wane, so you're gonna, you know, as you trade sideways, something's gonna give. It's either gonna break out and go higher, which, what do we have here? I usually like to use, if there's a group of lines from previous days, I throw them in there too. For the people who don't change their targets every night kind of thing. If you bought in here, see, then you're back through the top again. Yeah, just be very cautious. 488.80. Yeah, it's, you know, like I said, I'd like to see the market for the bulls. You know, I'd like to either see them go sideways, you know, but try not to take it 91 degrees higher. Ultra bonds. Okay, so here you have the deal here. You know, FOMC. I was hoping that we'd make some sort of low, which would be the high in rates, and then we trade higher into the summer. So banks keep dropping mortgages, so we help sell homes, that kind of thing. Also, if you roll out of stocks, maybe you run into debt, you know, that kind of thing. Fixed futures, they rolled over on Wednesday, and so we're starting high again from down here at under 12. So now, you know, the VIX thing is mechanical too. You know, the price of options. You know, basically there's the quote unquote null fear. It can stay down. It can go farther or further. Yeah, but it's like I said, you're getting this. You get the heavy call buying, the angle of ascent. You know, it's one of those cautionary things. Here's the Dow, right? Yeah, I guess we did look at the Dow earlier. So we're trading below the last couple of days. So everybody that's in here is now, you know, not so happy. Same thing with regular bonds. You know, like I said before, you know, you can begin to start seeing this thing, you know, tick, 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 back up. Here's corn. Okay. Working our way lower, just like with the beans, the wheat, the money flow. I noticed that as the prices dipped another, what was that, 8-10 cents, the money didn't come out of it. So I'm wondering if wheat's going to have to go back into the 380s. But here's corn, you know, la. You know, I guess we'd have to look at a bigger picture, wouldn't we? Yeah, that's so much of a bigger picture, Kev. All right, well, here's the old big picture. What am I looking for? I know exactly what you're looking for, Kev, but you're not finding it. Bam. There we go. So well, that's what I told you about. See, Kev, this is why you should come to the meeting. You know, go to rehearsals, right, Kev? Open interest. Okay. Open interest is dropping with the prices. All right. Open interest is rising with the prices falling, which means that they're fresh shorts. All right. Here's 5 years paper, moving up, but it doesn't have the underneath swing that the bonds do, kind of flattening of the yield curve. What's this one? Soybean oil is trading below it. You just draw your trend line, broke on through, same type of deal, lower, lower, lower. Meal. Drops, trade sideways, drops, trade sideways, drops, trade sideways. Notes, matching patterns. Get out of here. Same type of deal again too. There you're getting some swing, but not as much as say like in bonds, where they may have overshot on bonds because we did do some. If GDP shows up weak tomorrow, I wonder if stocks would come back down. Would show that the economy is not as. It's kind of like before numbers, I go, okay, where can the most pain be inflicted? And that's kind of how I look at it. But we already know, it's the last numbers coming out of the White House. What do they call that there? My legacy, that kind of thing. So I'm not saying not here nor there, but the same thing. I'm treating everything with the debt is short covering. We'll see tomorrow. Same thing. Here's beans. Let's see here. $12 in beans. Does this work out? Pretty ugly, Kev. Yeah, you can take off your volume at any time. Wow. Look at that, buddy. Here, let's do this here. 20 years of beans. Okay, so what's this? Linear regression lines. No way. How did they know? Well, the data is already here, right? So this is the last hope for the bulls. Then here's 650 where we've been previously. Okay. I'm not saying it's going to happen, but as you can see, there's a lot of money in here. Every 4 years, right? So here's 8, here's 12, 16. So if there could be a hard washout, and then that's when I would come in, because this is what I'm looking for here. Here's 4. You get a run in beans. This was typical of what happens with beans. It was from $6 to, we'll say, $10. It's 20,000 on whatever, 4,000, 2,500, whatever margin is at the time. Margin changes with volatility. SPAN, SPAN. But this is what I'm looking for. Sideways, 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 sideways. And then this is where they give up. This is where I think we are in wheat. So for those of you in wheat, it's like, I suppose I could look at wheat, right? How about we save this, Kev? Very good, Kev. But it's the same type of deal here. All of this money is in here, and it's not going the right way. So we could have a collapse on wheat. 117.60 on the yen. Kev, why don't you go back? Yeah. Hey, CW. See, here's the deal, right? Okay, so we have a high in wheat up here. What's this? What? No. I want a longer term chart. This is what I'm looking for. Nobody wants it. Nobody wants it. Nobody wants it. I want it. I want it. Nice and a whole year of doing nothing. Hey, does that sound like copper? Oh, I don't trade it, so I won't opinionate on it. And then after it does this kind of thing, I'm like, oh, how did you miss this whole sideways? Yikes, you didn't set an alarm. Yeah, it's copper. All right, so this is wheat, right? Okay, so but remember, this was a secular bull market. Commodities became a trading vehicle, all right? So we get a run up in '08, blah, blah, blah. We get a bounce, chop, 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 chop. They came in on here, right? The money can's not working. So I'm looking for some sort of washout on here. What do we have down here? 330s. God, Lordy. Well, what we do is we send little emails to Kevin and going, Kev, am I supposed to watch July and December 17 wheat? And I'm gonna go, yeah, and try and watch for 18 too. You know, and that's what you're looking for. Is you're looking for one of those things where, you know, it's quiet. It's quiet. You get an opportunity to get in. You know, you buy deferred contracts, then all you get your swing, your first fullback, and then your wee. You know, and then it's like, here's a fun one for you. So what do we have? 962 and this monthly, right? Yeah, so what do we have? This is December wheat. Okay, so this is July. Where am I at? September. Okay, here's September. So we have new crop, and then December 7. So just to hold on, depending upon what contracts you have, because what's this, March? The following year? March, yeah, okay. So here you have where you're looking at your account and you're going, hey, I need a new Lamborghini or whatever. And then like I said, okay, for you to get this, you kind of have to stomach this, right? But like I said before, I mean, here's '07 by '08, it's over with, and you have to sit on your hands again for a few more years. And here's the wheat. You know, we're coming down here. We're just, you know, it's like, sideways action, and that's all you're doing is you're just, you're waiting and waiting and waiting. It's wheat, corn, kind of the same thing. Here's before we got into the whole secular thing. It already started, but you know, grains and that, they move by your drought and stuff. Same type of deal. Run, you know, it's quiet. Where are we at? 250 in corn. What was the low down here? $1.93. Okay, and we're $1.50 higher, which is $7,500. Oh, but there are no bodies in here on a monthly. Vasas Los. Saw that in the wheat and the beans, right? Yeah. Like my German. But we're trading below here. Huh. They don't want the corn, but they want the beans. And they have to give up the wheat. Okay. Whoops. What am I looking for? Not naphtha. No, I'll wait on that. Yeah. It's one more pass through here. So wheat's coming down, but we have the money in here. So we got to get them to puke it up. But they're not into the corn. They're not into the corn. Very interesting. While I'm at it, TF. All right, 9 up. Money's pushing. Money's not pushing. Well, MQ is not going to work, Kev. That's not going to work either. Oh. 57 or 52. So we're at 300 points higher on the NAS. This is your stopper right here, 4,700. Okay. Just looking. Doing my homework while I'm just looking. Dow 22. That's all that money though. It's going to be interesting year, won't it? What am I looking at? TFES? Yeah, TF, right? 1524. 1,300. So 170 more. Yeah. Oh. It's the whole blow off thing. Just like back in 97, 98, 99 kind of deal. It lasted a short period of time and then whoa, and all of a sudden you're cut in half. Which would be the breakout area right there on the Russell. Right? That's your breakout. So that would be about right if it hits up in here. And that's a reversal here. We held it, right? Yeah. 05 is what I said. I think we got to 8. All right. Gosh. Yes, I don't think I moved it up. 2450. All right. So that's 200 higher, 10%. And then the money would come in. So what do? We trade sideways through March. No, they're running it. Well, what do we have here? We have the low comes up, trades sideways. But we're doing the marching thing here. How do we do on the breakout? We poked on through. We shot up and paused. Here's a median line. So 2450. And I think I wrote yesterday, because as you can see here, we went above this one and came down and tested here. We went up and tested here. Well, if you go from one end, Kev, wouldn't you go to the other end? Wow. What's this? 2120. Oh, yeah, that's right. That's what we were talking about, the 2120. Swing up to 2450. And that would bring the money in, wouldn't it? Yeah. Every day past inauguration and nothing bad happens, it's kind of like after an unfortunate event of a bombing or whatever, the initial shock, but then the market moves higher. While I'm at it, Apple. I still say that this is the high on Apple. Amazon. Oops. Amazon hit the upper end. These aren't logged, but it's just, like I said, a point of reference. Yeah, how's Amazon going to handle 800? And Google. Let's see. We need Class C, right? Non-voting. We're banging away at the upper end here. All right. Just checking to see. Netflix double top. Facebook. Well, that's pretty ugly. That's quite the ugly 28. Yeah, that's quite ugly in the Facebook. What about Microsoft, Kev? Money's moving at a clip. And our Intel. What's this, Kev? Why are the lines pointing down? It's 49. Large sideways pattern. Nobody's interested, though. Money's been coming into it. Volume-wise, nobody's interested in Intel. Yeah. United Healthcare. Vertango. 95. All right. So, okay, good. We're good. Choose. Everybody's going, no, my stock. Okay, well, shoot it to me. Here's wheat. 199, and they have to give that up. And we're back to the beginning. All right, I'm going to post this. And you guys are off and running until GDP in the morning. Asta, Delph. Oh, here, let me go back again here. What I have going on here? Linear regression, and the money flow. And all it is I'm just looking for divergences between the money. It's a sentiment type of deal. Oh, there we go. You can see money's coming out of it as the price is going higher. They're not interested. Yeah. See, why would money's coming out as prices are rising. They are unloading, that's how I look at it. Yeah. UNH. Oh, all right. Let's take a look here real quick here. That's gold. So what's this? Okay, 1080. I picked this number 680. Or was it 681? Something like that down here. Like the breakout. Money is 1500. 1172. What's halfway? 1150. That just looks ugly, but you can see the money coming out of it. How about we do it this way? Bammo. We'll do this real quick because I guess some of you listen to me when you're getting up in the morning. So let's see, sorted by volume. Heating oil will work. It's that time of the year. Take a look at monthlies. Glad we're doing this in the middle of the night, right? Oh, this would be 8 gigs of Mac memory going. We're kind of warm. All right. Yeah, you send a report to the guys. You tell them what's happening. You tell them you guys should be doing this on a Timex Sinclair computer. Australian dollar. Whee! Okay, so this is 09 low. All right, 63. Okay, money's coming out of the Aussie dollar here. All right. All I'm doing is I'm just running through real quick here. British pound. Sideways. See, sideways, 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 sideways. Broke down, retested, and faltered. Money coming out. Okay. Remember the pound yen? Money coming in. Prices drop. Money still came in. Look at that. All of 08, and then it collapsed. The pound yen cross. Canadian dollar. This is going up with the oil. Oil unwind. Oil going, this is oil basically cracking the, what is this, 14? Cracking the $100 and coming all the way down. So do we spin this as inflation? You know, when I talk about shallow, bounces, how bullish or bearish they are, if they're deeper, not getting much trough here, probably a lot of option selling going on. That's what I would do. When something like it's beginning to do the kind of the sideways thing, it's kind of stuck in a band here. Euro poked down, so we need a reversal. 106 alert. All right. No washout. See how money all came out and washed out here? Money came, same amount of money approximately came in, and they only got this far and then a crater. So now we're finally cleaning them out here. Talk about 97 and stuff is probably what's going to do the trick here. What you're watching out for is a reversal. Well, that's pretty good, Kev. All right. So where are you at? 104, 104.87. All right. And they came out. So where did we go? 105 to 109. Oh, that's 106. Oh, yeah. 2-hour charts. Okay. Sorry about that. This was the 108 and a half I talked about. 109. All right. Japanese yen. And we're approaching an area. So this is the yen getting stronger and the yen getting weaker. All right, came back. At some point, Japan's going to have to float on its own. What are you beeping about? All right, that's a little one. Mexican peso. Okay, so for 2017, wheat, and then the Mexican peso here as a reversal. I think we're going to start unwinding these oddball currencies compared to the majors. All right, your New Zealand has a lot more to go. New Zealand. I wish this went back to 2000. I'll have to do another video on that. Wow, you guys really came in here. Wow, the New Zealand has a lot to drop here. Wow, that's a lot. Wow, yeah, New Zealand. This is 09 low. So oil hit 09 low. So New Zealand, what is this, 49.50? 1,800 more pips? Gazowie, Batman. New Zealand, Swiss franc. What are you beeping at? Oh. All right, so this is Swissy, 85 it looks like here. All right, this is the peg. This is the unwind of the peg, and now Swiss franc. All right, so Swiss franc has room to run here too. 1400, a lot more to run on the Swiss franc. Well, this one's been going on for a while in my book, I suppose. I'm looking for, like last year, I went through the indexes or the commodities and that, and I was like, hey, in November, I'm like, hey, look at this gold. I think it's going to go to 1400. We're at 1050. So I'm trying to find stuff for next year. Oh, look at you guys. We're banging up against here, huh? Lots of sideways though. See, here's 002. Look, Kev, $20 oil. You don't think we're headed there, do you? Well, I don't know. All I know is that there's a bunch of money in there. And if we go below, it's going to have to come out. Oh, that would be kind of awful. Need to set an alarm here. 49.14 sounds like a winner. Okay, 13 then. Okay, the dollar. Some bodies are in there. 91. Oh, don't laugh. Okay, 08. So that's when they got out of the unwind when they were running the yen and the pound. So now we're dealing with dollar strength. Weak GDP. That would be crazy. Well, the Federal Reserve is, again, they stopped doing the free money. So corporations are going to have to do it on their own, and truckers and that are rolling over. And rails. And there's a lot of money in you. Oh, could you imagine a weaker G? It doesn't mean any number can come out. It's what the market does, right? Well, let's walk this thing down. Active volume bars. Pressed up against that. 102. 97. No, that's too much. Oh, but that's a little triangle thing, Kev. That's that all continuation thing. I'd have to come out at 102. Oh, I know what I'm forgetting now that you're watching this. Monkey bars. Monkey bars. That will help the Kevin. Let's take a look and see what it looks like. What does tick look like for fun and games? There's automatic, and then there's tick size. That'll work. Okay. All right, so here, and then here, 101. Yeah, remember that the pound and the euro short interest. I don't think 95. It's just right up in here. 100. Already swiped once. We have 1, 2, 3, choppy 4. So we need an alarm set up in here. 103.30 will work. What I'm doing is I'm just watching for reversals. One of those things that new money comes in and it can't hold, and then it has to come back. Yeah. There's a S&P. Yeah, that's on an extension. Gold. That's not right, Kevin Meaney would say. Huh. Copper. That would be if someone was trying to corner the market. That one's heating oil. Oh. I have to keep my eye on a couple of you. Bodies are in it. Where are we at? You guys, come on. Well, it's commitment too. See, as you can see here, I have to take the data for what it's worth too. Like, how do you run from here to there with only this? 05. Here's 08. This is back to your drought and stuff, remember? And we're way down here. 17-year low. It'll be interesting to see how this pans out. It didn't here on the way down, though. That looks what, $7, $7 or $7.50. Hey, Cav, why don't you monkey bar it, huh? How about you, monkey bar it there, buddy. Apply. Icky. Tick size. Computers are going, don't do that. All right, so set to default. Okay. All right, Happy Blaze, 270. Amazing how that panned out. All right, long tails, we're pushing away from it, pushing away. So we're up to this guy again, 393. And the money's flowing in. You're gonna need a continuation here there, buddy. There, that helps out some. That'll be distant contracts. February, I talked about 14, didn't I? April, the following year. Okay. Four and a half. So another bar up into here into the 90s. $4.04. It's 408 or something, I think, right? Yeah, 408. All right, this is just the natty gas here. Trend line underneath, legs. Man, they're really in there, aren't they? We'll say it's committed. Come on, Cav. Go with the flow, buddy. Yeah, 414. Yeah, gosh, it takes off. That's the other thing, too. All those shorts, those swaps, they can get pinched, too, you know. Yeah, they have to run to the bank and go, I need more money. My hedges are costing me a fortune. Kevin talking to the screen. Oh, the Nikkei. Well, at least it's making higher lows. It's been a rough ride since 89. All right. 52, yeah, 52.47 for the, gosh, 42.80. Diamond pattern here. So what do we have count-wise? We'll call it 3950. 46 is 5, 6, 6 on 7 is 53, so it's an overshot. I was just trying to calculate the sideways pattern and marked it off as a target. Gosh. How many months do we have here? 1, 2 months. Would it be January? It'll be interesting. Platinum, all right? Palladium. Finally, looks like a head and shoulders on a monthly. 200 bucks, please. Look at that. See, nice and quiet. Nobody wants it. This one didn't last long before they got all giddy again, but that's usually what happens is everybody remembers this. You know, well, I suppose it's down here again. I should buy up. Platinum. Oh, good. $10 silver. See right here. Look at this. Nobody wanted it. Nobody wanted it. Nobody wanted it. Blip. First pullback from 8 to 5, right? Yeah. Took off. Unwind and yeah. And then there it is, all done. Sometimes you have to do that. You know, that's what, see, it's like the silver thing, you know, all through the 80s and all through the 90s, nobody wanted it. It's one of the, you know, for the young ones out there, you know, can you buy for 20 years and then hold on for another 10? You know, trust me, you can. VIX, oh, you gotta be kidding me. What are you guys doing? All right. Are you serious? September, October. 10. We got to, what do we got? Under 12, right? All right. So what do we have here? Here we go. So it was 1, 2, 3 months. So January, February, March. Oh, you guys are killing me here. $22. So that's 10% higher. The money's in there, though. A lot of it's in there, though. Scary. Bonds. $101. And $139. And $127. It should be happy place, right? $113. $116. And you're what? $118. $119. How far down do you go? So, okay, so after we're done farting around, Cav, you know that's not a technical term. 149 and 139 and 127. It seems a little. It seems like I remember doing a video talking about 147, 148 for targets. Well, like I said, you know, Bear market rally. Corn. That's right, we've already done this. They didn't want the corn. But you'd want to accumulate under 318. I'll put in a little alert there. So someday in the future when it goes ding, oh, I want 1775. And then you come in. So here's a move, right? But what do we have? We have a stronger dollar, which should pressure corn. Actually, you can, I won't do that now. You can go to profit charts and type in corn and you can figure it out related with inflation. Well, fives, that's right. Twos and fives are the front end. That's where the most damage is going to be. Okay. Oil. Bean oil. They thought at 12, so this was that. They came back in looking for the drought thing. So yeah, so we should have oh, this is a happy area. See, when prices in the 1950s and 1960s were surpassed in the 70s, they weren't revisited. So I'm wondering, because we have so much money out there, and you can see how it kind of has made a new base under here. What's this? This is soybean meal, 280. $220. I have to keep my eye on these things. That's right. That's what you do for a living, Kev. You look at charts and ponder. 121. Kev. Yeah. Okay, so the happy place is 125. For notes, 125, 118, and 112. That's a dead area, 121. (2007). Lowered rates to get the economy going. There we go. I want to look at something here with the meal again. That's what I thought. Okay. 177. Yeah, well, but the story here lies is when the dollar clears, say, well, if it clears 105, there'll be some pressure. We're going to go back. You know, here's where it was, and then it collapsed. So I'll have to go back and take a look at that's what that is. It's pressure that will build when it collapses. 216. 254 will work. Down the road, you know, they'll get out of this if it's going the other direction. What do we have? Alert TF marker below. What time is it? 10:10. So what do we have, Kev? S&Ps are down 5. Where's your Russell? You're gonna have to post this. Hold on a second. Go back. More people are in beans. Oh, don't worry. They'll come back. 2 years, and they're all out of it. Huh. Ooh, 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 ooh. We talked about this before, the wheat. Okay. So under 4. Go back to this, but I want to go backwards real quick here. My Russell dinged. You know how to spell Russell, Kev? Yeah, how about TF? Hey, how about you just put TF in here? Oh, what are we at? Monthly. How about daily? Daily natty gas is right up here. But we did have the money come out of it. New high, people chase after it. No conviction. 270. Ugh, I hate when that happens. Blarney. EIA today too. Besides GDP. Boy, it's going to be an exciting day. So natty gas is on the underside. Blew past it. Fell into 376. Came back down, retested this one. People said, yes, I want it bad. $391. I think there's a number. There's another number, 392 or something to that degree. And TF had binged. Yeah, there's that lip thing again. All right, I better send this on its way to you guys and gals. And everyone sleep tight for those of you in Europe. Good morning! Those on the West Coast. Good night. What do we have? TF 74, 64, and 84. 84, 74, and 64. Okie dokie, Smokey. Everyone take care. Hasta del fuego. Whatever that means. 30-minute bars. 60. 40. 42. 37. Okay. All right. Well, we shall see, won't we? Take care and good night.